The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN, 10 a.m. Eastern Time, 30 minutes into the trading day. Right now, S&P is negative by just 1 point. NASDAQ positive by 27. Some of the tech stocks trading higher yet again today, extending those gains. Dow Jones negative by 18 points. Story of the day could be notes and bonds again, pushing highs of the session right now. You got the 10-year up more than 11 ticks at 140.09. The 30-year up a full point and 6 ticks, trading at 182.25. And you're looking at a 10-year yield right now, 0.517%. Remarkable action. Jumping over to the VIX. The VIX this morning trading at 23.89. And we're fortunate to be joined by our man, Basil Chapman, filling in for Tom this morning. Basil, good morning.
Good morning to you. And this is going to be a very interesting session because you've got a really mixed market. You've got the Dow struggling just to get to the trendline resistance at 26,700. You've got the IWM showing a little bit, it had shown a little bit of strength. And I think that I'm really intrigued to hear what Kevin's going to say, because he looks at all the stocks that are really on the cusp of either breaking out or they're coming out with earnings. So I think it's going to be a very interesting week because we've had some of the really big cap stocks come out with earnings that were really good, and they've kind of stalled. The Amazons, Apple's the only one that's gone a little higher, but most of them are stalled here. So I'm going to be really intrigued with what Kevin has to say. Yeah.
Well, let's jump right into it. Let's jump over to our man Kevin Hinks, folks. Right after this program, Fast Market by TD Ameritrade, Thinkorswim. Kevin Hinks, Alex Coffey, the whole team. Great time of year, the most fabulous time of the year, earnings season. Kevin Hinks, good morning.
Good morning, Tommy. Good morning, Basil.
Good morning, Kevin.
This time of year, guys, you get a day like this, and each day takes on a personality and has that headline name. And, well, today, Disney. Disney and Beyond Meat are the two names that we'll be looking at today that have earnings after the bell today. So two names. Obviously, Disney is a stock that's got a lot of things going on, a lot of parts, some that are doing very well and some that, frankly, are closed and aren't doing very well. So we'll trade Disney. We'll figure out how to break down the parts of the company that are working and aren't working, and we'll trade them up, guys. The expected move right now, about $5.60.
Pretty cool. I was hoping you'd mention it. And Beyond Meat, Kevin, the run. Now, Beyond, they're at 138.33 right now. We got the one-day expected move, about $17.58 on Beyond. And, man, this has been a rocket ship overall. But just since Friday, from 122 almost to 139 today. Talk about some volatility in that stock, man.
Yeah, I mean, obviously, the rally the last, 2.5 days in Beyond Meat is pretty substantial. Up 3% to start the day today. So there's clearly some speculation ahead of their earnings report, what they're doing. Yeah, and Tommy, when you look at a name like this with a $17.50 expected move, that is incredibly large for a stock to have, way north of a 10% move on earnings. So that's a big number. Think about this. It's got a we'll call it $18, $17.93 move, and a $20 move for the rest for the week. And it's 18 of them in the next 24 hours. So big news coming out of Beyond Meat. Interesting how we'll try to break down Disney. Like Folio is going to cover Beyond Meat as well. So lots to talk about there, guys.
I mean, some volatility right out of the gate for Disney. It spikes from basically 115.50 to above 117.20 right on the open. And Uber, I mean, like you said, Kevin, every day taking on its own narrative, right? Uber, they're going to be coming out with their numbers on Thursday. I'm just seeing, it's always interesting how some of these stocks accelerate. We get pullbacks. Uber's up almost 5% today, right out of the gate from 31 to 32.65 ahead of their numbers coming out. And how about this note and bond market, Kevin? Larry did his program at 9 o'clock. You know, the path to possibly negative rates, I don't know if we'll get there. The Fed doesn't really seem so. But you can't argue the type of move we have now at about 140.10 and the 10-year yield approaching 0.5 of 0.5%, man.
Yeah, with a 10-year yield at 0.51, that they have basically taken, if you think about it, the Fed has basically taken the bond market and speculation on interest rates kind of off the table almost.
Sure.
There's really no risk unless we get some type of shock in an inflation number, which doesn't seem imminent in any situation, that there's not much that's going to move these rates. I mean, the number that came out, the inflation number that came out the end of last week, income and outlays, that gave absolutely no hint of any inflation, as the year-over-year numbers were below 1% for inflation. So there's just not much. And the bond market is, small moves, but boy, very unvolatile. It must be hard to trade bonds right now because you've got the Fed lingering whenever they drop off. So there's no pressure on rates, guys.
I was just going to add, they've used such strong language that they're going to be in there until we return to, and I forget the exact verbiage, but something in the neighborhood of normal, which we are a far cry from right now. So they are going to be in there for a while, supporting that market, buying, keeping rates low. I would agree. So beyond meat, we have, of course, Disney after the bell. I talked about Disney many times, dealing with the parks, the woes. We're in Florida. Some encouraging numbers coming out of Florida in terms of the curve flattening. I'm sure that would be nice for Disney, opening back up. And then we get the rest of the week. Jumping around to gold, Kevin, quite the number for gold. We're approaching 2,000 yet again, 1999 as we speak on that gold contract. What do you think of this gold contract as we shot from 1,800 to 2,000 in the span of basically almost 2 weeks now?
Yeah, we were discussing this the other day on the network, and it's basically the scenario is the dollar goes up, gold goes up. The dollar goes down, gold goes up. So the basic, the general theme is gold goes up, and gold is trading. It's really a microeconomic story going on right now, even though gold is always considered macroeconomic. But gold is going to looks like it traded elevated levels until we get some resolution on the size of these balance sheets and things like that. So I don't know what's going to break gold, but $2,000 is a historically high level, and someone who wants to trade gold from the long side here, not with my money.
Yeah, you at least, like we maybe talked about for the long term, like we talked about work on some scaling at some of these prices across the board almost. I was talking about that on my program this morning. I mean, Apple, Microsoft, how do you enter this company even in the long term right now, and maybe space out some of those buys over the duration, because even Apple today up 0.7% again. To extend those gains. Well, Kevin, we look forward to it, man. Disney, with their expected move beyond meat, up there with $18 as well. And we look forward to the program. Have a great day, man. We look forward to the show 45 minutes from right now.
Thanks for having me on, guys.
Thanks,
Kevin. Stay tuned, folks. Markets in green territory. S&P is positive by 3. NASDAQ positive by 31. Dow positive.
If you're
26.
not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Basil Chapman, Tommy O'Brien. Right now, S&P's positive by 1.5. NASDAQ positive by 23. Just jumping around quickly to some of these tech stocks, Basil, because the moves, Amazon up 1.6% today. Clawed back some of yesterday's losses right up there. Even Netflix up 1.5% today. Apple shares right now up 0.6%. You're within about $8 of that all-time high. Let's check in on Microsoft. They're pairing some of those gains, but they've run from $199 to $217. Quite the pop. And as Kevin Hinks mentioned, we get some earnings tonight after the bell. We get Disney. We get Beyond Meat. And I see you got a chart of Amazon up there. Should be some higher peaks, I imagine. I see D's across the...
You see, this is interesting. Going into the report that Amazon was going to come out with earnings very soon, it had this really strong rally from the 2600s back at the end of June, and it went to 33.44.29 on the 13th of July, the all-time high. And then it had... here at TFNN, there are a number of hosts, your father being one of them, always talking about the A to B equals C to D. Well, that's that perfect pullback that it had going from the 33.44 level to 2020. Then it bounced to about 32.60. Then it pulled back to a slightly lower low. And now it's gone to a slightly higher recovery high. But if you look at this H pattern that's gone to a lowercase m pattern, it's kind of stalling. And in this particular phase right now, with this week, with all the great earnings that others have come up with, you would expect that it would be closer to the high. You cannot complain that it's only 200 points from the high, but look, it's been 3 weeks since the high in the weekly chart at peak D. You remember at peak D, we're always looking for, there's a chance that that's where something else can happen. And it's a leg D in the monthly chart. So I think this is telling us a story. And this is the first time that I'm looking at the QQQs, and I think to myself, wow, everything that you would expect to go right has gone right. Now what we're waiting for is some follow-up. But can you get a follow-up in Amazon right now when really the very best of the best has unfolded for Amazon? Yes, a lot of people will remain with Amazon, but this could be the phase where you have to account for the fact that people are going to start going out, maybe to the stores, and that will impact a little bit, even if it's 7%. You know, if it's 7% for Amazon, when you're talking such huge numbers, they've got a supply. They've got, the vans. They've got it's actually a very expensive operation. But they're getting all the trade. So I'm looking at this and I'm saying, okay, try to be as rational as you can. Fantastic company, one of the leaders for this whole segment. You can even say for the whole year up until now. Would you expect that there's just a little bit of slowing down? And my suspicion is yes. I'd look at it, then I'd look at the chart and say, well, you can see that here because you've gone into this kind of rectangle formation. Nothing wrong so far. You can only call it a high-level consolidation. But I'll just give parameters that I'm watching really closely, because if Amazon over the next 3 weeks, instead of pushing way into the 30 through, I'd put into the 3,500 area, instead starts to test the 2,900 area, I think that we're looking at one of the major components of the NDX 100 starting to falter. That doesn't mean it's breaking down, but it's just faltering. It's running out of steam, and it might need a bit of a breather. So I'm just trying to be as ruthlessly practical as possible, admitting that this is one of the top stocks. But at the same time, I'm saying I think Amazon could take a breather, and I think that's important when you go one by one. Look, Apple, spectacular move. It's up today again. So this is the one that's breaking up, but you can go through the others. I like to call it Google instead of Alphabet. I've had a terrible time calling it Alphabet. It doesn't make sense. I don't know how they came up with that name. Google sounds so much better. So Google's trading down at $1.92. This is not this is the A shares, I believe. Is that the C shares? Yeah. So it's at 1472. It's off its high, off the all-time high. Again, peak D in the weekly chart, only a peak C in the monthly. You can go to Netflix, and we're actually looking at, you're talking about Disney. Well, here's Netflix, and Netflix is way off the high of 575. It's down at 508. It doesn't sound like a lot, but you look at the chart, peak D in the weekly again. So I'm just saying, I think there's a little bit of a breather here. How we come out on Friday, how we come out of all these daily charts and the weekly charts at Friday's close, I think for me is going to be quite important. And I think that if you look at the QQQ, absolutely spectacular move. But this cup formation is something I watch very closely. And right now it's holding very nice. It's up 77 cents. But if at any point this week you start to see it at about 264 or lower, that'll say, okay, here again, sideways action. Take a breather for a little while. No big deal, but I just wanted to point that out. And I went through this with John and Philly, who called me yesterday on my show, and we were discussing the weekly chart. Very strong up channel, hasn't broken the upside, hasn't broken the downside. It's just steady. Each candle has intra-week a lot of points, but if you look at it in the longer term, it's just a steady up move until it starts to break below. The weekly chart has to break under 259 to really show that it's that's negative action. So far, quite good. So I'm just saying, daily chart says maybe a bit of a breather coming up.
Yeah, at the levels that we're at, I mean, you could argue that everything, all of the future growth that they're going to have in the next X amount of years almost is almost priced into some of these equities with the kind of multiples they're trading at. The other side of that is we're seeing a shift to where these mammoth technology companies are going to be able to really accrue a lot of the growth, a lot of the cloud, a lot of the business, the revenue, the advertising, the retail online, whether it's Walmart, Amazon, Lowe's, Target, Home Depot. Now, I've gotten questions. I talked about it on my show at 8:30 saying, if I wanted to step into an equity like this for a long-term investment, retirement, whatever it is, maybe it's for your kids, maybe it's for yourself, maybe you just split that up into buckets, is what I was talking about, Basil, and you just determine, because, timing for the long term when you're going to be in this and you're really in a long-term investment, very difficult. And, in the same respect, getting into Apple shares when it just went from 380 to 440 in 3 days. But if you get in now, you get in 6 months, you get in another 6 months, you're over the next year. Maybe you cut it into 4 buckets and you're in 6 months out, whatever you're comfortable with.
And you can use it as time, or you can use it as price, or you can use a combination of time and price.
Yes.
So
right.
There's a way to do it. And when we've looked back at some of these stocks, and it's almost embarrassing. Look at this weekly chart of Apple. I mean,
Sure.
Right there, down as it crossed the 9-period moving average, went positive. Right there, the week of the 8th of May. We're talking about May, and it's at 286. Every single week you could have said, oh, my God, especially when it went to the double top of 327.85.
Yeah.
That was the high of January of 2020. You say, oh, there's a doji candle.
Yep.
And now you look back and you say, what am I?
Yep.
Any day
you
I
would
could
have said,
bought it.
I can't buy now, right? It made back all the losses. Surely there'll be another dip, and then I can get in.
And there always is a dip.
You just missed $120 from 326 to 442. Okay, stay tuned, folks. Val's and I come back in 3 minutes.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Basil Chapman, Tommy O'Brien. S&P is negative by 1 right now. NASDAQ positive by 14. We have the Dow or -3. And I was jumping around to some of the other companies, Basil, with earnings this afternoon. Twilio, one of those companies, talk about a rocket ship, man, from 68 to 288. Currently trading at 282 for their one-day expected move right now. We're looking for $24 on a $282 stock. So as you'd expect, when a stock goes from 68 to 288, when stocks have these types of moves, Basil, with your system of higher highs and peaks, how do you look at something like this? I see you got some of the charts up there on different time frames.
So you can see what we've been talking about. Just to go back to yesterday, remember yesterday I said, I've been waiting very patiently. We did a short attempt in the Qs about a week or so ago, and that worked for about 2 days, which is, in this market, that's not bad. And then it took us out. But at the same time, I said I thought that was going to peak C in the weekly chart and would be pulling back quite sharply, and that I'm anticipating that when we get to D in the weekly chart, that's when we got to be a little bit cautious. And as we were talking yesterday, we went to QQQ right there. We went to that leg D. Now, what's really important about this, in the weekly charts, when you get a very quick peak C and then 1 bar or 2 bars rest, and then and just a brief rest, and then you go to D, that D has to be very strong to say, hey, that's a breakout, and that you probably won't get more than a little pullback, and then you should go on to higher highs. But if it's just a nominal high above that C, you've got to be a little bit careful. And if you're looking at some of the other charts, some of them went from a D, 1 bar down, and then you made an E yesterday. Now, if you go to Twilio, which is obviously, it's just an incredible stock. Well, we've just begun the week, so obviously you expect to have a little candle. But so far, it's a little doji candle in leg D. So when I try to put the whole package together, I'm saying, it doesn't mean that because you're getting to D in all these weekly charts that there has to be a serious pullback. But it does say from here, from this very moment, this is where you start to become a little bit cautious in the sense that it's after D that other things can happen. So putting it together, we were looking at it's down $3.38 at 314. Twilio, TWLO is the symbol. And I've got an alternate count. Normally, I would just stick with the B, but I think it's important here because the stochastic's good at 95%. The MACD is good. So it really, in this particular instance, it is going to be, and you say, what was it, 17%? You said it's a big move that it could have based on the data that we've got. But I would suggest that if there is a pullback in Twilio below the 9-period moving average of 268, and it's 282 right now in the next few days, and then there's a close, then you've got to start being a little careful because two things are happening. One is it's gone up on the expectation that everything's going to be really good. Look at that monthly chart, just a single leg there and soaring up from the lower, what did you say, 68? Yeah, something like, 68.
Yes.
06. And it's trading at 282.86 right now. So this is where I'd be careful. And absolutely, if there's a blow off top and it just screams to the upside and it's lost, overnight, I don't mind if you see it at 294. It's what happens after the conference, and then what happens tomorrow. If tomorrow, instead of holding a big gain, it gives back the big gain, it kind of fits into this kind of package that I'm putting together that says there's a lot of just very short-term excessiveness that might have to be just worked off a little bit. So that's what I'm doing there. And so I'm just, as you know, I thought Twilio, I haven't looked at Twilio for a little while. So here it is. Nothing, I mean, look at that weekly chart. It's just, it said, what? It takes weeks before it even makes a peak. It just keeps going higher. Look at the distance between the peak B and then the C and now the D. So it has been spectacular. So if there's any disappointment, you've got to be prepared a little bit for that. And I think that when we're talking about the earnings reports that are coming out now, the expectation is one thing, the earnings report's another, but there is a backdrop that I want to mention. I'd spoken about this yesterday. I'm going to bring it up again because I think it's something that, at least for me, I'm treating as quite important. There is a dark cloud news cover. In other words, we don't know yet. Look, we've already gone, what is today, the 4th? Yeah, the 4th. We've already gone 4 days without the checks even being sent out. Not only that, they don't even know the number for checks being sent out. So there's a chance that we could have a stalling formation right here. You remember I was talking about the match over here, and that's from the August of last year pattern, and we kind of matched it very well so far. So I'm actually a little more cautious, even though for subscribers we just entered one short position today, but mostly we're long, and we've had one went to an all-time high yesterday. One that's coming out this afternoon is Upwork. I believe it's coming out this Upwork. Upwork is a stock that I really liked, and we got in. We got two positions, and we took a little profit here and a little profit there, and then it broke and took us out. I have a fairly tight stops. Here, this bar that went to $12.86, 96 cents. We were in from $13.88 and $13.24. I just didn't feel like if it closed there and then went down the next day, you're kind of stuck. And it's an IPO. It's only been around for whatever, just over a year. So I didn't want to take a risk, which is basically I want you to take the risk, but for subscribers, I'm really kind of careful. I don't want to sit with something that really just sits on your head. You have a 15% loss and you say, oh, gee, how am I going to get out? And it messes you up. So
mentality,
either a break-even trade or a little bit of a loss, and look what it's done. It screams. It's at a new recovery high. All-time high was around number 25 after it came out as an IPO, dropped to 512, and now it's coming out with earnings. And the reason why I liked it, it connects businesses with freelancers and independents. In other words, there are a lot of people out there and they don't know where to go. There are a lot of businesses that say, hey, there are a lot of people out there that could be very good for our company. And I heard the CEO, and she was really articulate some time ago. And I thought, gee, this is very nice, connecting businesses with people already doing the work. And so it is. So the earnings, and what I'd also said is, if the top tier starts to stall in the tech sector, we might find that fund managers are now looking at the second and third tier. So I'm embarrassed to say that we're out of it, and it's done exactly what we wanted. I even drew this cup formation. It's done everything, except I made the stop a little too tight. So I know some people have still got it, but I'm very strict. If we missed it, we missed it.
Yeah.
And I didn't want to jump in, although yesterday I said it looks really good. I had a whole thing over the weekend, a big report on it saying it's looking very good. But I would have missed it because it gapped up yesterday, and I wouldn't have bought the gap up. But look what it's done. So, so this is what I'm saying, that there could be a rotation through the different sectors, so that within a sector, you might find that fund managers saying, these guys haven't moved, and this is a good company. So we'll see. So the earnings is going to be very important. If it gaps up and holds, I think it's just taking off, and I don't know how we'll get back in. But if it pulls back, it might be something to look at.
Earnings always important as it comes to roost, and they got to put up those numbers, and we'll see. I mean, Ford, they're out. I had that chart up. Their CEO is out as they've continued to struggle, getting a little bit of a pop on new CEO news for Ford. Stay tuned, folks. Battles and I coming right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. S&P's flat right now. NASDAQ positive by 11. The Dow positive by 29. Big week of earnings. And then, of course, we get the payrolls number on Friday as well, Basil, to kind of sprinkle that on top at the end of the week. What do you normally look at? Do you kind of factor that into what you have going on when you have such a big number, especially recently coming out? Does that factor into when you're looking at trades? How do you look at something like that on that weekly, monthly number?
I put that under the dark news cloud cover because it's how the market responds. So sure. Ruby just sent a little message into the den saying Senate Democrat a leader talks with White House on stimulus finally moving on the right direction. You know what that means? That means that the stimulus package is going to be bigger than what the Republicans want. So when you and I were talking, we were talking about just a regular market, looking at the charts. But when you get these bursts of news, that especially when you're talking about stimulus, and especially when you're talking about huge amounts of money being put into the market, which so far, well, put into the economy, let's say it eventually goes to the market, but it goes right into the economy, that so far has been the huge benefit to the market and to the economies to keep things. We spoke about this yesterday. How can you have 17, 18 million people out of work and expect nothing to happen, just to go to new highs? At some point, that comes to, yes, something should happen.
Reality matters at some level, for sure, right?
It does, but you know that reality, and that's the thing about the Fed, and what I was saying for years, is that we're anticipating that the Fed at some point has to normalize rates. But actually, this can go on for a long, long time because there's been, I called it, you remember the Japanization of our bond yields?
Yes.
And that Japan went to zero, and that eventually I've been talking about this for maybe 40 years, 30 years.
Sure.
I mean, who knew that actually you'd live through that? And I was talking about negative interest rates. Hey, if there's a commoditization of yields and they're going down, there's going to be a race to see who can get the lowest. So that's one thing. So this is a factor that we can't ignore. And I had a number of, I don't know if you've got a moment for this, but I had a couple of questions about a particular stock, and then in the Dan asked about what would you do with Basil? Would you hedge before earnings, or is this ready to break high? And that's the upwork that we were looking at. So when you and I were talking about it, we were said, oh my God, and look at an Apple, any single week on the weekly chart, you could have just bought it, even though it was at a high, and it just kept going high. And that's what stocks that are really on a major run, a major bull market, that's what they do. They embarrass you by saying, I could have bought here, I could have bought here, I could have bought here, and here.
Sure.
And it just keeps going high.
Right.
So I said to Dan, if we have a moment, I'll just talk briefly about it, because I think a lot of people are looking at stocks and listening to the program right now and saying, I missed the stock, I missed that stock, and they've gone higher. What would I do? So here I had a question. So Upwork, it's my impression here is it's in the right area. It's not being recognized fully. So if you're looking out and you think that this is an area that's going to improve and be recognized, that's the connecting businesses with entrepreneurs and independent freelancers, then you don't have to. I have a rule: if I've missed it, we buy, but we buy a little less. In other words, risk reward. I'm trying to ameliorate that, but we're now forced to buy less. At least you're in it, right? And you can always add on it on a pullback. So what I would do is, if earnings are coming out, that's a big deal, because at trading at 17.06, if the earnings are really disappointing and the CEO says, oh, it's not quite what we were expecting, well, you can have a move that keeps you down for a while. But if you have a longer term outlook, then the theory that I have, and INFIN was the other one that we had traded before. We had it as a screamer. In other words, at a quick move in a single day. It's just gone steady since it made its peak D in the weekly chart. Infinera Core Digital Optical Telecom. So we don't have it, but I had a couple of questions from subscribers to say, we've traded periodically. What do you think? Earnings are coming out, I think, tomorrow. So there's two of them in the same position. Earnings are coming out. They've had a big move. What do you do? Well, on a short-term basis, I would not trade this. I would not put a position on, because it could go up, it could go down. On a longer-term position, I would say, look, if you're really positive about this, why not nibble here? If you're wrong, it's a nibble. So, it's not the end of the world. It should come back to your price at some point. But if you're right, you're in the play. Now you're in it, and you have a good sense. So the next pullback, you can start to have a bigger position. So I wouldn't trade it as an earnings play. It's just they've done too much, both of them. And you either have to be perfectly correct or perfectly wrong. But if you want to hedge, you could do it through options. I agree with that. And the other way of looking at it is say, look, if it breaks away and gets away from me, I'd be very upset. So I'd rather have a little bit, kind of a feeler, just to say I'm in it, and that gives me a sense of what to do. And if I'm wrong, I take a tiny loss, because it's only a very small part of my portfolio, and I took a smart position. So that's with earnings. If there are no earnings and you've missed it because it's a big move, feel free to go in with a smaller position, because now you're at least in it. You don't have to look back in 3 months' time and say, any week I could have bought it and it just went up and up. So that's the way I think of it. Start a little position. It's not your big position, it's a little position, because you're looking at, and that's, I'm suspecting it's the way you're looking at your own portfolio, your own, what you're doing for your subscribers is looking at and saying, I'm positive or I'm negative, and this is what I'm looking at longer term.
And I think you add into that companies, if you're really going to hold through some of the dips, right? I look for companies that I know cash flow wise, very established, right? And that's why, I look at Disney, which I love a lot. Even a company like Uber, they were going to they were going to be cash flow positive as of by the end of this year. They came out, kind of surprised the market early in 2020 with their earnings. And then, of course, COVID hit. But a company like Uber, multi-billion dollar company, right? Brand known everywhere. They're really consolidating things on the growth sector for food delivery. Really getting hit hard in terms of whether it's business travel, airport travel, vacations, traveling with Ubers, the likes that we've never seen before. But again, that's going to come back. I mean, I don't know if you saw the story. But if you're looking out a year, right? If you're looking out a year, will things be as bad as now? Well, hopefully not. Probably not. No. So it doesn't. Yeah. Right, and that doesn't mean it's back to normal, right? In terms of the same numbers, the same amount of travel. But you look at the growth they're going to have in there, and then you add in that normalcy will begin to be priced into some of these equities on the hard part that they've gotten hit, like Disney, like Uber. And then I saw today where you had Facebook securing leasing in New York for a property from Verando Trust. A huge deal for square footage. Really? Yeah. And let me see if I have it up here, because, for the first time, you're really seeing, do we? I don't have it up. I'll find it. Because Facebook, capitalizing, I'm sure, a well-capitalized company, online growth. They're not going to be bringing employees back, I think, until like middle of 2021, but they're capitalizing on that deal of real estate corporate space in New York at a time that a bargain is out there, realizing that we're going to return to that normalcy.
And Manhattan needs it, believe me. Yeah.
Yep, and that's, yes, I think it's VRO. Is it VRO? VNO. There's that spike.
Okay.
From 34 to 36, up 6%. Sell into Facebook. Stay tuned, folks. We'll be right back in 3 minutes.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab. Bam!
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We get the S&Ps now positive by 6, getting a little bit of a pop even since about 10:35. We're up about 10 points. We're climbing towards those overnight highs, within about 2 points of the overnight highs right now at 32.97. So, Basil, I have up here real quickly. You did a subscriber webinar just towards the end of last month talking about chart formations working in the first half and what you're looking at for the second half. Folks, the Opening Call, you can get there on the newsletter tab, right on the front page of TFNN. 30-day money-back guarantee, great service. But Basil, could you just talk about a little bit briefly, I know subscribers gain access to the archive, what you talked about in there. I know I attended, but it was a great webinar.
So there are a couple of things that are really important, just very briefly. One is that the chart patterns that work on the upside invariably work inversely on the downside. But you got to have patience because you got to wait for the turn. And I always believe that very strongly that if the turn comes, it's not a chart pattern. It is the whole mood. It's that dark news cloud cover that you've got to have at least two forces of negative news coming together to keep pushing every day to see the market come down. You need the futures down, the S&P futures down 15 points, tries to rally intraday, and then it closes down 15 points or more. And then the next day it opens down 15. It tries to rally and keeps making lower lows and lower highs. And the news has to be perpetuated by the media, and it has to increase so that you hear it once every 3 days. Then all of a sudden you hear the same news almost every hour of the day, and that's when you get that acceleration down. So I was speaking about the emotional part that you got to be familiar with, but also the fact, look, I've got this Chapman wave inside track repellent zone. If we break above it, that's important. If we pull back, we can start to look at patterns. So I discuss how to use the patterns and what to look for.
Folks, it is a 93-minute webinar archive in there. You can gain access to all of his archives. Sign out for the opening call and check it out. Basil, thanks for joining me, man. We look forward to the program at noon, as always.
Thank you, Tommy. Always enjoy it. Thank you very much.
Stay tuned, folks.